Good morning, everyone. Welcome and thank you for joining me today. We often look at the market through numbers, levels, and indicators. But today, I want to take you slightly deeper into a concept that combines both structure and instinct. A concept that helps us read the early tone of the week in a powerful yet simple way. It is called the Friday and Monday balance level. In this presentation, I am going to explore how the high of Friday and the low of Monday can give us an edge just by showing us key support and resistance, but by offering a reference line, a balance point that often guides the price action for the rest of the week. Here we are looking at why this range matters, how to calculate it, how it aligns with the market profile, and most importantly, how to use it in live trading to build directional bias and discipline. This is not about predicting the futures. It is about being prepared when opportunity appears and, and recognizing when the market makes its first move. As I wrap up, I leave you with a short poem, a reflection on trading movement and courage, because sometimes the market doesn't just reward analysis, it rewards action. So understanding this is an understanding a practical intraday method for balance level detection. What is a weekly balance level? In my previous video, I had talked about weekly template from Monday to Tuesday, Wednesday, Thursday, 5 days in a week. Actually, the weekly balance level helps identify where price is accepted early in the week or rejected in the week, early in the week. It acts as a reference point to judge potential direction or balance in the market. It is commonly derived from the initial range of the week, that is Monday, Tuesday. Monday, Tuesday sets the tone for the rest of the week. It can be used as support or resistance for breakout directional bias. My simple effective logic is using Friday's high, Monday's low to gauge early week sentiment. I'm using Friday's high and Monday's low to see the early week sentiment. Calculate the average of these two values. When you calculate the average of this Friday high and Monday low, you will get a balance level. And you need to plot a horizontal line for the Friday's high and Monday's low, and a line for balance line. This balance line indicates the bias for rest of the week. I'll show it in the coming slides. Why this works? Friday sets the sentiment from the previous week. Friday is the closing day of the previous week. Monday is the opening day of the current week. Monday often sets the early structure or trap moves. Combining the two gives a midpoint of initial market agreement or balance level. Traders often react to these zones. It becomes a self-fulfilling level. See, this is Friday's high, Monday's low, and we are plotting like this. We are getting an average, and this line acts as guideline for rest of the week. This is an example of voltas where this is Friday high, that little bit lighter yellow color, Friday's high, and this is Monday's low. And here, blue color line that is running actually, balance line, it is giving you a blue color line that is the average between the Friday's high and the Monday's low. It is given an average line of 1366. See in the how the price acted from this balance line. It was a reference point for you people to keep stop loss or to have a bias in the market. This shaded, this one is Friday and this is Monday. And this is Friday's high and this is Monday's low. And you can see from the previous week, the balance line is running across. So this is a balance line from the previous Friday also. You can see previous week balance line is aligning with the current week's balance line, indicating consolidation over here. And you can see the price action over here in voltas. So 1366 was the balance line. And when the market opened above this line, here you can see the market opened around 1382 and made a low of 1376. It crossed. It was a very bullish up move in the market going up to 1400, almost 1400 in the voltas. Coming to the Nifty, I'm showing you this was the July starting of the month, June 20th. 30th, you can see the start of the month, Friday and Monday. This is Friday and Monday, and the balance line came around 25,560. You can see throughout the week. After Monday, it started coming down. Wednesday, Thursday. So, Thursday, and then this is again Friday. And the balance line you can see over here, 25,561. And for the next week, the market started rejecting from this line. This acted as a resistance. And here for the balance line for the next week, it was the balance line 25,437. So the market fell on Friday here and Monday balanced and it moved upwards. Still, it faced resistance from the previous week. And market started coming down, breaking below this line. And then market moved downwards. You can see over here, this is Friday and Monday. And the balance line formed for this week is 25,160, and balance line from the previous week is very far away, 25,437. Market had a room to go up to this level, but it has broken down. 25,300, it has broken down, and the range breakdown. Now market tried to move higher, and we need to see what will happen today on Wednesday. How to use it in trading? If the price stays above the balance line, that is bullish bias. That's what happened yesterday. The market conquered that balance line in the opening bell, 25,160, and then it traded towards 25,250. The market moved positively. If the price stays below, it is a bearish bias. This balanced reference line act as mean reversion level even for scalping also. You can use it as use with price action or momentum confirmation. You can add VWAP or TWAP for intraday confluence. So, friends, I'm going to close this presentation so that you will get benefit from this insight into this concept, identifying the weekly balance level. That is very, very important once you identify the weekly balance level, because institutions respect those levels. Institutions levels, that is the institutional level. So if you also get hook of that level, you can also trade profitably. Okay, friends, thank you very much for patiently listening to my presentation. And this concept of looking into the weekly levels, weekly template, it will bring edge into your trade. You don't need any indicators or anything. This balance level will act as backbone for your trading. Thank you very much. Nalnakshi Swami signing off.